Hey traders and investors, it's Serge Berger here. Today we're going to have a look at Facebook, which if you look at it a little bit closer as well in 1 second, you'll see that it's starting to try to to set up for a gap fill trade with a very defined risk. So we'll look at that here just in 1 second. Before we get into that, though, just real quick, if you guys are interested in joining us for high probability swing trading, come on over to thesteadytrader.com. You can click on this button right here, and that gets you over to the daily trade alert service where you can trade along me using a high probability swing trades. We're up about 17.5, 18-ish% year to date. So if you look at Facebook, of course, you'll see that it's been a tremendously great trending stock. A trending high beta stock like this does not come without its hiccups. So after the big breakout here in July 2013, we had a good mean reversion move in the November period of 2013, so 1 year ago. Then another mean reversion move in the March through April period of this year. And then the stock broke higher again in July and has basically been consolidating in the broader sense ever since. If we take a look at this a little bit more closely, now I find that drawing boxes, as simple as that may sound, actually really helps for perspective. And you can see in the bigger sense, basically, Facebook has been consolidating ever since its July upcap here, and I guess it's July 24th. It's been consolidating in a constructive manner. So right now, if we look at this a little bit closer, as I promised you a second ago, Facebook actually gapped down after its earnings announcement here or the reaction to it on October 29th, and ever since, the stock has been consolidating more or less in a sideways range again that helps to draw a very simple box. So what it's trying to do now though is create a series of sort of marginal higher lows, and the more the stock leans against a very clearly defined risk area, which is about or actually very exactly $77, and let's call it 70 cents. You do have to give this maybe 5 or 10 cents of leeway. If we can close above that area, $77.70 or so, there's a pretty good likelihood that this stock will start moving higher and start closing this gap, which would make it about 4% or so. Again, closing that gap here, the down gap from the latest earnings release. I hope this makes sense, guys. As always, if you got any questions, please let me know. You can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.